welcome to the Cresco Capital podcast, where we dive into the world of finance, investment, and market trends. Today, we have a special guest. Joining us today is David Svoboda, a part of the Cresco Capital team, and he works as a professional trader. Glad to see you here.
Hi, Andre. Nice to meet you.
So, today we will cover a lot. So, let's jump in and look what we got here. I want to start with your career journey. What first got you into the trading? What inspired you to become a trader?
Well, my journey began sometime around my first year in university. I was always interested into the stock market and the finances in general, following what's going on in the world. And when I started going to university on my bachelor's degree in economics, I started to gain interest in trading. At that time, it was cryptocurrencies. And as many traders, you gain insight, you explore what the graphs are, you get familiar with technical analysis. Further, you find out bonds, commodities, stocks. And then it's a never ending journey of learning, and brought me here basically.
So it's really interesting to have a question about what your typical day as a trader look like. Can you?
Well, typical day of a trader looks like you come to the office usually in the morning around 9 o'clock. Before that, I like to have some sports to keep me balanced, some exercise in the morning. Then the first hour or two is more or less checking the news, catching up with what's going on, what happened overnight, managing positions, keeping up with what's going on the market. And then it's basically research, reading, studying, finding ideas, seeing what's going on in the sectors I cover. I'm responsible for healthcare, some commodities like oil, silver, and gold, and technological sector. So I keep up what's going on there, what's the news, what's the trends, what are companies that I'm following doing, and I'm trying to find opportunities with the team how to make money to our clients. It's the ultimate goal of the day.
How do you stay updated?
Well, it depends on what you are trading. If you're a cryptocurrency trader, Twitter is probably your homepage, I would say. If you trade commodities, equities, or stuff like this, you need to read reports. When it comes to trading oil, for example, IEA, EIA reports, OPEC Plus reports, bank reports, market outlooks. That's your base. You need to understand the general direction, and with commodities, supply and demand dynamic. Later on, you need to be updated with general going on in the world. So Bloomberg is very good. Reuters, Financial Times, New York Times. If you speak German, some European newspapers. For you to give you an update about what's going on where, that can have different effects on gold, for example. Wars have big effect on oil, so you need to know what's going on, what's emerging, who's talking to who. Then I suggest on Bloomberg, especially my favorite is to subscribe to newsletters. Very good. You can choose what's your interest and be updated on a daily basis. And then, as said, reading as much as possible in or in the industry specified from industry specified professionals. In other words, if I'm researching something in healthcare, I need to sometimes also dive deep or try to understand the science, which is not easy sometimes, but you need to really dive into the level of almost academic readings to assess the potential or this potential.
How traders decide when to sell? Your process around this.
Well, that's a complex question, and I don't think there's a straight answer to this. A lot of people, especially in the beginning, try to find some holy grail of trading, some strategy that would always be right. That is not the case. You need to deeply understand what you are trading. So, in my case, it's healthcare stocks and technological stocks. So, for example, in the healthcare stocks, we are looking at areas or diseases that are very hard to discover or for the cures to be discovered, such as Alzheimer's these days. That is a very perspective topic we are looking into. Great potential there. Or we are looking at companies that are already in commercial state, so they have already FDA approved drugs which they are selling on the market. We need to look in companies which have big potential in increasing their sales. So to summarize this, you need to have your fundamentals intact. First of all, understand what the potential of the company and the sector is. Then you need to have an understanding of the global economy, of macro. And then you use or try to find optimal entry points by using technical analysis. And when you have a solid idea, you discuss it with the team. And if it's a fruitful thing, we decide to move forward. So that is more or less
Yeah.
the process of it, yeah. To determine it in one sentence is very difficult. It's a mix of a lot of factors that need to come together to have a decent idea and trade. Yeah.
And what about like the present? Can you give some your like thoughts or ideas on the market right now?
Well, of course, when it comes to the technological sector, the big question is, data centers and energy consumption. A lot of technological stocks like the Magnificent Seven is very priced on future earnings, which is a big question mark, especially these days regarding to DeepSeek AI, which came out, that is putting into question the efficiency of the need of expenditure into hardware and development. Second thing is data center infrastructure. As I said, AI applications are a big, AI adapters are a big trend. Energy providers are a big trend. And when it comes to the healthcare sector, GLP-1 receptor drugs were very fruitful in the past years and still are. This is around $53 billion industry, growing around 17 to 20% a year. So participating in that is very fruitful. As said, Alzheimer drugs have a great potential. Alzheimer is actually a disease that is very complex, very hard to cure, and a company that will emerge with a drug for this will be very, very profitable. So we have a couple targets in our mind. We are watching this very closely. Besides that, oncology and cell therapies are also a big trend in healthcare these days. Of course, AI and machine learning adoption in healthcare is also a big topic. We are covering a bunch of companies in this matter. We see great potential in this. What many people don't realize with the application of AI and machine learning in healthcare, it's not that much, in my opinion, about the hardware or the machines itself. It's more about the data collection. If you want to train language models or AI, let's call them language models, specified for diagnostics in healthcare, you need very quality data specifically from patients, essentially, when I break it down to simplify it as possible. And these data are very expensive and very hard to get. So companies that are emerging in this sector, they are able to gather a lot of health data from patients. Those will have a big advantage and potential to grow. Because when I make a comparison, if we take GPT, let's talk very in simple terms so everybody can understand. If when you're learning your AI agent based on the GPT language model, you need data, but ordinary data is not that expensive. The cost per trained unit is not that high compared to healthcare. So that is a big area we are focusing on in the company. In the healthcare sector.
Yep. In your opinion, can you name like top 3 sectors or assets like will be promising in the future?
Data centers, data security, Nuclear energy could be good, and I said healthcare, in my opinion. Those are things I cover. Those are things I understand the most. Of course, it's possible there will be other opportunities in other markets, cryptocurrencies, some commodities. The beauty of the market is if you know where to look, you can find an opportunity pretty much every day somewhere.
How do you see the market evolve in the next like 6 or 9th month, like in this year?
Look, making predictions like this can be very hard. Mm, I have a certain idea. In my opinion, it's at this point, it really is going to depend on whether the spending in technology in the United States is justifiable. Once this will continue, we can see some potential growth. If companies in the US, the tech stocks, are going to not be able to justify their AI spending, which is very possible, then we could see some corrections on the market. By the way, I'm seeing this trend quite frequently in a lot of AI adopters and companies that are having SaaS models as their business, providing AI. Actually, the growth in this sector is still above 20%. But compared to 2 years ago, it used to be 50, 80%. In their reports, they are saying that their acquisition of new customers is pretty much flat. So I'm seeing slowly a little bit of a cool down in the AI boom from the side of really companies that offer application. Yeah, so it is all dependent on this.
So yeah, I want to ask you about the economical part. What economical like events or can influence in the market?
Federal Reserve
Or you can see it evolves now,
Fed's rate,
fate
of
rates.
course, the Fed, Trump and his policies. A lot of can change in this, depending on how much tariffs he will impose. What's the global politics going to look like? Yeah, what he's going to do. So far, what I read, they want to start imposing tariffs on Canada and Mexico, I believe.
Mhm.
So important to watch this. Because tariffs in the ideology of Trump is to help the U.S. citizen, basically to tax the importer and elevate the burden from the U.S. citizen. Yeah, but you need to understand the U.S. is trading with everybody around the world. So if we sparkle trade wars like this, that can produce huge volatility on the market, and people should be, or traders need to be prepared for that. Watch that closely. This can produce great opportunities.
David, can you share the ideas, the previous for the upcoming year with your clients, your company?
So the ideas for the upcoming year, as mentioned, we have a couple horses in the Alzheimer sector. Immune Bio is a company with a very promising research. They are developing a cure for Alzheimer's, which in their clinical studies is showing great improvement in the length of life. Basically, if you take if the patients that are treated with this drug have the delay of full development of dementia such Alzheimer's prolonged for about another 20-30 years. That means that if you're diagnosed in your 40s, there's a good chance you can live a very high quality life up until your late 70s, where most likely you will probably die of something else than Alzheimer's, but or you will have some other disease, but you will still be able to recognize your mother. And the market for this is huge. It's a multi tens of billion dollar market. So if the company has a successful penetration in this, it would be very good. We are monitoring this, and the company is growing greatly. Other ideas we have is, for example, TG Therapeutics, which is a company that is already in a commercial state. They are having FDA approved drug, which was approved last year for recurring multiple sclerosis. The beauty about this company is that they are growing their earnings rapidly. Their projections last year were 220 million. They beat it in Q4 for the whole year and up to 310. Projections next year are 520, and I expect them to beat this as well, all the way to the target of peak to 1.2 billion annual revenue. In my opinion, is very possible in the next up till 2027. So also a very potentialous company. Besides that, we are monitoring some clinical research companies which are in the GLP-1 sector. Amelix Therapeutics was one of them. We were able to capture great movements in this company, especially in the second half of last year. It is a company which has phase 2 clinical trials research in a GLP-1 agonist cure. These companies or this company in particular is quite small, but if you find such a company with a highly desired research, which not many small companies have research going on for GLP-1 receptor agonists, which makes them a hot target for potential acquisition or potential speculation of a collaboration with a bigger pharmaceutical company. When it comes to technological stocks, we are closely monitoring the semiconductors industry. We are seeing some players who are currently in quite an interesting correction. So building a longer period of time position there is on our radar. As said, we need to assess whether the spending will continue, whether the machine computing power is required, regards to the recent developments in the past few days. Other than that, we were able to catch some good moves on CrowdStrike, for example, which is a cybersecurity company, also in the software and AI sector. So the ideas are there. Silver was also a very great trade. We were riding most of last year and even today. The reason for this is firstly fundamental. There is a shortage of supply of silver globally going on for the past 5 years. I've read an annual report or the outlook for next year very recently, and the projections are that the spread between supply and demand is going to widen. Silver is known for its firstly utility as a safe haven asset, but secondly, it's an industrial metal as well. It is required for chips, it is required for cars, batteries, a broad spectrum of application in silver. So it's an interesting instrument. And oil, my favorite. I was having a great thesis in our meeting about oil. I'm maybe having a wild guess, but I was telling the team that I'm very bearish on oil in the upcoming year. So in my opinion, it's worth monitoring that if you're a trader. The production or the supply of oil is going to surpass demand, surely. The consensus is, as I mentioned before, pressure from the United States to keep energy low. Therefore, in the connection also maybe keep inflation low. So I believe we could see oil in the range of 50s, maybe higher 40s in the span of next 6 to 12 months.
What's your thoughts about the Europe?
Well, Europe is a big topic these days. First of all, there is a divergence between the Federal Reserve and European central banks. As you can see, Fed is holding rates. European central banks is cutting them very fast. compared to the United States. Second part is if you look into valuations of European companies, especially in the DAX index, for example, you will find out that you have high quality companies trading at one third of the multiples of the United States equivalents. For example, Deutsche Bank, for example, Merck's, which one is a pharma, second one is a bank. Very interesting companies trading, asset highly undervalued. I don't know if the train has not passed. We are monitoring it in the team for a couple of months, so we were able to capture the upward trend. But since money is getting cheaper in Europe, the consensus, the political consensus, is shifting. France is going to have elections. Germany is going to have elections. So the period of European stagnation slash little decrease was quite long. It's going on for 5+ years. The skepticism about the European market is enormous. Nobody believes in that. If somebody watching this is familiar with the contrarian trading strategy, then your ears are probably listening very carefully right now, because I can see it even when I'm listening to people from my country in Czech Republic. A lot of Czech businessmen, business people are starting to getting interest into undervalued German companies, manufacturing companies, and stuff like that. Second thing about the European market is the requirement of increasing expenditure for defense from 2% GDP to 5% GDP. This is an enormous amount of money that is going to be flowing into the defense sector. Now, in Europe, it's like this. When you have, for example, Daimler or some other car manufacturers, they usually are able to switch and produce defense parts and products as well. So looking into these sectors is going to be also, in my opinion, very interesting in the upcoming topics. If you look on the DAX, if you look on stocks 50 indexes, CAC 40 also, they are growing quite nicely. I'm looking at it every day for the past 2-3 weeks, and I think this will be great potential. We will see a rotation from overvalued to United States stocks to places like Europe where they offer opportunity. You need to be able to move your money somewhere where the valuations are not so overstretched, like on the United States market. So I think that could be worthwhile. The uninterest in the European market is going on for too long, in my opinion, and I think we will see a period where this will change, and maybe we will see some upward movement in the development in Europe, politically and economically. That could be an interesting thing.
Like, what's your perspective on the future regarding this year? What we should expect from the market?
In the energy markets and oil markets, maybe we can expect some downward pressure on price because of slowdown in Chinese production or consumption. Sorry, Trump's policies to increase production of oil in the U.S. His spending and idea of returning industry and production in the US all requires cheap energy. You cannot rebuild manufacturing and factories without cheap energy. Cheap energy is a key factor in this sense. So we could dive deeper into this, but to summarize this, I believe there could be some downward pressure on energy prices in the US.
Can you give us some thoughts about the major trends?
In
What
my
do you think?
opinion, it will be technology. It will be technology. I think in 5 years, we're going to see a lot of companies that are not even publicly traded yet. A lot of new players will emerge. I think the global leaders in technology are going to be companies that we don't know about yet. I think we will see great development or great projects in robotics, self-driving cars, and areas like this. I think robots is going to be a next thing that will fascinate us, and it's going to be a huge market. Elon Musk made on his earnings call a couple of broad statements that his robotics business will earn him $10 trillion in the upcoming decade or something like this. So they are expecting huge numbers, a lot of new technology is awaiting us. A big question is how AI will shift everything, even if jobs that we know right now are going to exist. So we will probably see, shifts in the labor market, new positions, new jobs, new companies will emerge. So, but I would stick to technology. I would stick to healthcare, in my opinion, not only because it's my expertise, but those are industries with huge growth potential. Healthcare, for example, it's currently over a $10 trillion industry. By the year 2050, the elderly population will increase by 80%. So the market outlook for this is huge. So technology, healthcare, preferably mix of healthcare and technology.
Yep. So it has been a really interesting, fascinating conversation. Thank you, David.
Thank you as well.
It's been a pleasure to having you today. So subscribe to this channel, and you can give us some more feedback if you want. Follow us on the social media. Thank you very much, and see you next time.